I think we're live. So now let me share this with the group. Well, Perfect. Okay. Hope everyone is okay. Hope everyone is having a good morning and a good night if you're in Asia. Um, as I told yesterday, I want to do something different today. I want to use Bookmap. It's probably gonna get a bit choppy because my connection is not the best. But I tested it the other day and it wasn't that terrible. We'll check a few answers. I want to start with an overall check of the market of the altcoin market because I always start with Bitcoin, and also Bitcoin is basically not doing anything wrong. It's like, yeah, this is bullshit. You can trade this. You cannot trade this to any degree of. I don't want to say this. That's the reality. I think we can do check Bookmap. Because it still has something to analyze in terms of the order flow and how to use the system for scalping. But I also think it will be a better use of the time if we check some altcoins first. Uh, in regards to when to trade, this is actually very important because as a scalper, if you're a person who tries to scalp, and I am in the scalping challenge slash project nowadays, you cannot expect volatility when there is none. You cannot expect to the market to give you scalps when there are none. So, for instance, let's just check this. This is the plan that we started uh, this week, and I say we're going to start with. Sorry if I cough or have a stuffy nose because I'm still recovering, but I'm much better. What was I saying? This is the plan that we started yesterday. We probably should be using the no weekend one because I don't want to trade on weekends. And I'm aiming for 1% because scalps are not the only thing that I do on the day. So yesterday we ended the day, I think, in one, yeah, we make 11 bucks. Sorry, we make 11 bucks yesterday, so we hit, so we hit our goal. Um, that's good. That's great. So today we start with this balance, and we have to aim to make another 10. um, I think this is easier for me to teach you and to show you how to approach scalping. Um, why? Because as I was mentioning, you can get and I mentioned this a lot of times. Remember, what we are trying to farm here is our multiples. We don't care about the percentages that a coin moves. We only care about how much money we put on the line and how much money we made as a result of the trade. So with that in mind, if you give yourself a bit of a structure, I'm trying to be more structured. I woke up at 9 a.m. today, which is a lot for me because I tend to wake up very late. I tend to work up until late in the day. Um, But the structure of waking up earlier is gonna be useful when there is volatility in the market early. Sorry. So, what was I saying? That we want to focus on Bitcoin first. We're going to check some altcoins, and I want to show you a bit of the way how I'm using trend following and range trading at the same time. For instance, what we want to be trading, and that's important. We want to be trading something that has volume and something that is actually moving. So let's say we filter by top performers here on TradingView, and let's say IDs and ChatGPT spot and the VIX. VIX, that is interesting. And the VIX, and ChatGPT are the two top performers of the day. Okay, and this means that at least the market is moving in some direction. You can filter by volume as well. I don't think that I will be using that. I just will focus on the chart. So, coin that has basically not much of a price action history. It has around 1 month. Yeah, around 1 month of live on Bybit spot since it was listed. Magnificent uptrend. Let's just do this. Let's delete all the indicators so we can make clean context analysis. We usually start with the monthly, if you remember. The process is always the same. You mark the pivots, and that's how you get the context, right? But in coins that have very little price action history, you don't have much to work. So we can mark these stop. Remember, pivots are the bodies of the candle on higher time frame, and they are relevant because if they are untouched, you are expecting the lower time frame price action to give a significant rejection. Of course, you play a swing with the super wide stop, I don't know, um, it's not going to be as efficient, as effective. Sorry, but you want to mark the levels, and that's why they are the context only. They're not a trade in itself. Weekly pivot here. Remember, we use orange for the weekly pivot here. We use the wicks because, as you remember, the wicks of a time frame are the body of the candle of a lower time frame, so we don't need to care that much about the wicks. For the sake of simplicity, I just choose to use the opening and closing of candles, which perform the bodies as they are also watched by many other participants in them. So here, pivotal price point on the daily. The daily is blue. Maybe we can put another here. It's a continuation one, and when price tested here, this is a good example because there is not much deception. Here is a level that a weekly level that wasn't touched yet, and here there was continuation daily on a coin that doesn't have that much of price action history, so it's relevant. Go to the lower time frame, and what do we see? We see the context for trade for a trade is the continuation pivot. We see in this area that there was what I told you in the stream the last time, that was a zipper. Zipper means that here money changes hands before breaking out of the range. Therefore, you can expect some level of reaction here as opposed to maybe here. Look at the price wicks way more when there is an inefficient gap, as opposed to that when price is free falling and it hits an area of higher concentration of volume. We go even lower on the time frames. Yes, same case. Inefficient gaps, they tend to get filled more quickly because the same case here, inefficient gets filled quickly. And it's the same case I expect price to do here around this area because this is a hard rejection from a weekly level. And if we ever touch it again, we might extend a bit more because of the consumed supply that there was here. But I don't expect it to break it on the first time. Therefore, I think that here we could start placing a limit short. It makes sense. That's what I mean. In terms of context, of course, remember always, it's not a trade. The context are not trades on itself. They are just places where you can be interested in engaging with the market. So I think 2 hours is enough, low enough of a time frame to work with. Do we have a trade yet? Not really. I, I don't see anything just yet, except for the fact that this is an uptrend, but there is a significant rejection. So here's when we start to use indicators. You made your analysis, you have selected the time frame that you're most comfortable with, and it can be any time frame. I mean, if you remember, time frame is the same because it's going to be fractal. Uh, Price will be moving in a fractal way. However, your invalidation can be tighter in a lower time frame chart. So you might want to make use of that in terms of you can probably use a tighter stop and have a higher risk to reward ratio if you put that enough detail on the end, so to speak. I don't know how to say. Anyway, I prefer to use the 2 hour. I think I'm more comfortable with that. And the indicator that I would plot here, this is the whole process of how to find a swing on an alpha. Um, I use the weekly, sorry, the VWAP bands, which is basically volume weighted average price, is simply the volume transacted over the course of a given period, plus one standard deviation up and one standard deviation down. Value area high, value area low, fair value. There is this concept on the auction market theory. I'm going to try to repeat myself again, but it's important for a reason. The concept it has more to do with how the market tends to smooth inefficiencies. If you remember that article that I sent you from Robert James around maybe a month ago, that say one of the easiest ways to trade is just mean reversion, and there are mean reversions everywhere. Let's just here. Mean reversions means that for instance, this is the fair value of Bitcoin during this bullshit chop, right? And you can be very mad at it, and you can say, okay, this is untradeable. I don't like. But if you pay attention, use a very simple indicator, and not that the indicator is going to trade for you, but the indicator makes sense to use in this case if you're trying to make something out of this price action, because price action alone here may be not very nice to trade on its own. That's when you can help yourself with an indicator such as the VWAP, because you can see the volume distribution and what's the price that the market is agreeing more to trade over this last week. And the price that the market agreed more to trade over the week is the central VWAP. If price is trading below, you can take your chances, especially if you have a higher time frame pivot that sustains the auction and helps it to not dip deeper than it should. Well, the auction market theory tells you that as a range trader, you can simply go long. And if order flow helps you, you're probably going to have a nice entry. And this is, remember, with tight enough stops, these are very high risk to reward trades. I'm not saying you would catch them all. I actually think I caught one of these, but sold it too early. It was this, yeah, probably this. Yeah. I sold here because I said, or maybe it was, I don't remember. But It's not that you're gonna catch every top and every bottom, but it's a more organized way to trade ranges if you help yourself with a tool such as a VWAP. That's why I like to use them a lot. Anyway, so what we see now is that price had a huge deviation from its mean. This if there would have been more volume created around here, the VWAP would have continued to move higher. This is another way to use similar to the OVV, the one that Eli uses a lot. It's a way it's a similar tool because it allows you to see if an uptrend is sustained by volume. When an uptrend or downtrend, whatever, is not sustained by volume, it means that there are less and less participants willing to accept the price. Remember, acceptance implies volume. If it's a complicated concept now, but if you want to simplify it, just use it that way. If there is acceptance, there should be a higher concentration of volume because people is interested. Volume is like the tool that you use to see if the market is interested in a certain price or not. And volume creates the mean of a certain price action structure. When it's super deviated from it, you can expect a reversion. Maybe you didn't caught this one, but maybe this is a good example. Here there was a new month, and there was a monthly close about a monthly pivot here. Price failed to create more volume, then you can fail. Enter a short around here in this zipper, because remember what are zippers? Even if it's low volume, it's an area of good context because of the weekly pivot, the monthly pivot, and at the same time, there was a zipper here, so there was a concentration of volume that would have made the price harder to flip. It's not the same as an inefficient gap. You got a nice short and a middle version short. So what do we see now? What is there a trade here? That's very nice, all that you're saying, but is there a trade here? The thing is, we are at the VWAP. And when you're at the VWAP, you can expect two things. The first one is a rejection, because the market is once again incentivized to trade the more accepted price. So one side can create an imbalance. However, that side has to be convinced enough to revert to an extreme. That was not the case. And the auction market theory also tells us that when the same thing but here, if it's failing to flip an extreme of a value, there is a really high probability that the auction will revert to the other extreme. So at some point, expect 0.10 on ChatGPT to be huge. This is how we create the bias. It might seem very boring, of course, because I tend to be boring when I talk. But this is how you create the a bias for a trade. In the middle, you can get very chopped because there is not a clear auction. However, we start to see some signs of what to expect. This is when I plot another indicator, such as this one, the whole suite, and the whole suite can tell me if I can expect a trend to be formed. Why? Because if you remember, the whole suite is this indicator tends to react very well to price. Touches break, but price ultimately started coming lower. This deviation made the trend follower indicators to start flipping. So we need to be careful that to not enter on a false signal. But for instance, if we enter it in this signal right here, on the first touch of a newly formed trend, we would have had a fantastic trade. And it's like that for the most part when the conditions are for trends. Remember, if you consider this is a reversion, we could start considering longing as soon as the price touches it for the first time. However, what's the problem here, and why I consider it's not only about the indicator? The indicator is telling me here that this is a trend too, right? But why it failed? Why it ultimately failed? Because it's at the VWAP, and the VWAP is a choppy area. And what do we know about trend following indicators? That they don't work choppy areas. So in this case, right here, this was a better use of it because we were at a lower end, at a lower bound, sorry, lower bound of a range. So if it start, one of these should have worked. One of these was the trend. However, look at this, how it failed and flipped and gave you false signals. So you gotta be careful when playing trends only based on an indicator. I've been very guilty of playing that way. That's why I'm being more cautious right now. I'm being aware that this could very well be a false signal. I would prefer to play a trend in a similar situation to this, or in a similar situation to this, for instance. Here, this was a perfect entry because we had the weekly level, and we also had the trend following indicator showing that there was resistance. So this is a better confluence, in my opinion, than this one. This one could work but also could also fail. I mean, ultimately, if we actually pay attention, yeah, price is at a very choppy area, but it's still in a down. We never made any significant high yet. So what would be a better example? Well, maybe wait for a new higher high, for a flip of this level and long resistance. Yeah, it sounds stupid, but you can actually long resistance with a better degree of certainty right here because the trend is more established. But at least if you take some of these recent highs, I think that would be more risky. I mean, I don't think this coin has an established trend. It's only on a place of top. So that would be how to go around price action to form a bias using the higher time frames and lowering to see if you get an entry. Uh, we don't get an entry for the time being, but we could probably place an alert here. We're gonna place an alert here. If price dips and gets reclaimed on the uptrend, we're gonna try to see if we can enter along. Remember, the market looks like this. Looks like this. We don't want to be overexposing ourselves just because we see a probable entry on a scenario that we know for a fact is not favorable for trends. So what we're going to do is just wait. I know it's incredibly boring, but we have a plan. We have a method, and we are traders. We should not be just here for a trade just because. That's also a message, and it's something that I want to do. I want to accomplish. If you want to know a little bit about me, for example, I'm not a full-time trader. I work and I have other activities with my life, but I do study trading every day. So I want to become a person that can have a performance in trading that allows him to make his a more relevant source of income and of gains and of because I already work every day in the market, so I actually think is the most natural path to take. And I also like I like it a lot, so that's my goal, and my goal is going to be reflected on the challenges that we have. So now let's do some order flow analysis. This is, I think, the most interesting part of the stream because I promised you all to make an order flow analysis, and I think um, order flow is better explained live. So I will now mute my mic. I will open Bookmap. I'm going to to heat some water so I can continue drinking my mate, which is like a tea. Um, I will test if it's not very choppy when I open the application, and we're going to continue with this stream. So one second. Um, Let me open bookmark. This maybe maybe I could pause the music. It's a very heavy application, so the stream can handle it. We put it in trading mode, even though we are not going to use it in trading mode because I've had a few issues. I prefer to execute with the terminal because the trading mode is sometimes a bit buggy. I've lost money by issues that the API has with the the exchange, so I prefer to not use it. But I will still count it that way. Mm, here's our application. Loads. think this is probably not going to be able to stream, which is unfortunate because I really want to finish book now. But we'll try to do this. No, we'll do it. Yeah. Oh, connection is off. Let's do the very basics. Let's do the very basics. Um, this is basically the order book of this and this. This whole thing that you see here is at the market working at this very moment. What you see right here, and um, in these two lines, the red line and the white line is the best bid and the best offer. What that means? That means that price is not comprised of only one thing, as you might already know. Um, I'm gonna hope this doesn't get too choppy. Anyway, as you already know, the price is made out of the best bid and the best offer. Price is not an unique thing. It's not a unique thing. Um, that's why market orders exist and limit orders exist. All those numbers you see here are the limit orders. All all the limit set orders, these are the limit buy orders. They are not real volume. This is real volume, and these little dots that you see here are market orders that cross the spread and are executing over the best bid or best offer. So this is, let me see if I can zoom in. Um, this is basically, as you can see here, this is a buy order executed over the best bid at the time. And this, is, this little fluctuations price, sorry, the best bid and offer, and how market orders enter one side or the other. So this is the most basic way you can see how and why price moves. It's not magic. It's not something like, I mean, many people ask me why price moved a certain way. Well, it's because a little dot, a little balloon of this decided that it was a good idea to execute over a certain book in a certain state and press move. Here you enter the trade, for instance, you enter the scalp and you had a 1, 2 tick, 4 tick trade. Let's say you had your stop one tick. In crypto, we don't trade this way as much because of how illiquid it is and how easy it is to get stopped. But what you're seeing right now is basically algorithms playing with each other. It's quite funny because once you understand price in this way, you will never um, try to assign any outrageous reason of why price moved and because the Saudis were buying or whatnot. It's simply market orders executing over a book. How do we use this to make trades, which is the most important? Okay, you remember context. Okay, if we know that, for instance, let's check the context. Not here. Here. Let's check the context. Context here tells us that we are uh, at the um, value area low of this week. Okay, why? Because this is the VWAP. This is a 3-minute chart, and this is the week started here, and this is the value area low. So, what do we know about responsive trading? We know that it's usually a good idea when the environment allows it and there is enough protection for stops to sorry for for stops to enter along once price is below the value area low, because we know price tends to mean revert. So our bias uh, could be leaning towards trying to find a long, not to enter a long right here, right now. Remember, we try to be as smart and as calculative as possible, because we have a plan and we have a projection and we want to make it real. We don't want to enter trades just because we're bored. I mean, if we don't see a pattern right here, we don't enter. It's as simple as that. So, and remember, this is microstructure. You don't have a lot of room for error. If you get stopped by a tick and price moves higher, then you're out of the trade. It is what it is. And also, if you keep your a heavy long, because remember, risk to reward here is very high. Sorry. If you keep open along that is not working and you allow it to go very low, you're probably going to get liquidated, especially if you're using high leverage. So we have to be precise. That's the main idea of using order flow to help you with the timing. If you see an auction like one we were just seeing, let's start with the context. Context, value at a low. So we could look for a long at at a given point. We look at the auction. The auction tells me that we're basically chopping around and going lower. So demand, which is market orders being executed, market buys being executed in the absence of enough sell liquidity. This is parent buy liquidity. But look at how interesting this is. This is the more red the level, the heavier the liquidity. So this is supposed to be buy liquidity, but then price goes lower and it gets instantaneously pulled. This is algorithms, because look, you can see it in practice. This is just baiting demand, and there is no intention to execute here. This is all vapor. Price goes there by a microsecond and it has to retrace because there is simply no demand. So what we are looking at, this is interesting, we're looking at here now is the back and forth of pretty much a higher frequency trade entering in the spot. We were looking for a long. So one of the ways to use order flow to your advantage is, once you identify an entry, you can use this tool to see if the auction means these buyers and sellers interacting with a given with a certain order book. Buyers and sellers, if the auction, sorry, is on your side. If you enter it along and you start to see sustained market buy, even if it's pairs, you can feel a bit more confident that the market will keep moving in your favor. And look, I don't. This is very very quick to see. That's what I think. I thought it was going to be a good idea to see it in practice, because you also have to develop an eye to read these things. If you notice, when price pulled back, there was a flash provision of liquidity, one tick below the best bid and offer. There's no human being on this earth that could do that quick. This is not a human being. This was just a bait for price to consider that it was not a good idea to be the lower. So they kept lifting the offer and kept lifting price. So let's say an algorithm or a person entered the trade right here. You start to see this. Look how price is attracted to liquidity, but then liquidity disappears. So these games are what many on the group are trying to help you avoid. You see this? It's fantastic. I love this shit. Um, if if you consider this is too noisy, you're all right. I mean, if you consider that this was a good entry, your stop needs to be here. for a reason, because this doesn't tend to last for long, and that's why scalping is usually done in a few minutes. It's like you enter the trade, and if you really look at here, we had a strong market buying, then it started to disappear. This is called exhaustion. Exhaustion is when you get to a significant area of the price action, and then the efforts of certain of the people, the participants sustaining the action, they disappear. So, what do you think is going to happen if one side that is literally sustaining an imbalance, this is an imbalance, um, disappears? But the other side is going to enter and try to make a profit, because this, as you remember, this will look like a gap. This is literally a gap. It's a one-sided auction. So we got one-sided auction, a gap, a place where, as you can see, in reality, not many limit buys entered. Therefore, limit shorts had free ride lower. Now, this is an interesting situation because the auction now changed, and we are 3 minutes into the auction. We start to see market selling start to increase, as you can also see here. But now the